Welcome to today's deep dive into the digital asset landscape for July 17th, 2026. If you look at a massive construction site from the street, all you see is dirt and chaos.
Yeah, just scattered equipment everywhere.
Right, exactly. But the real engineering is happening deep underground where you can't easily see it. And that is kind of the paradox we're seeing in digital assets today. On the surface, the market looks totally exhausted.
It really does. But underneath, traditional finance and big tech are pouring concrete for this entirely new financial foundation.
So let's unpack the dirt first. The surface has definitely been messy, right? We just saw this brutal liquidity grab.
Oh, absolutely. Bitcoin tried to clear that $65,000 mark, failed, and just washed out the short-term speculators. It dropped nearly $3,000 down to around $62,500 just to find a floor.
Which makes sense, seeing as it's a highly defensive posture right now.
Yeah, when macroeconomic variables introduce uncertainty, algorithmic traders fall back to established price floors. It pulls momentum indicators right into oversold territory.
And that defensive environment is just crushing overexposed companies. Like, look at Satsuma Technology.
Oh, wow. Yeah, that situation is rough.
It really is. Pantera Capital is actually forcing a proxy vote to liquidate hundreds of Bitcoin that Satsuma bought near the $84,000 peak late last year. They've lost almost all their equity value.
Basically capitulation.
Totally. It reminds me of a cargo cult, like blindly hoarding treasury assets, hoping profits would magically appear without actually building a functional business engine.
Is this just the final flush of last year's exuberance?
I think so. Especially when you contrast Satsuma's panic with what's happening quietly on chain today. An 8.5-year dormant whale just moved almost 6,000 Bitcoin.
Wait, really? 6,000?
Yeah, worth nearly $400 million. And they originally bought in at 16,000. It is the perfect illustration of different time horizons. Right? One entity liquidates out of sheer desperation, while another just patiently absorbs multiple cycles.
Yeah.
But you don't absorb cycles like that unless you know the underlying infrastructure is expanding.
Exactly. And the heavyweights are absolutely moving in right now. Like Citadel Securities just dropped $400 million into crypto.com.
Pushing its valuation to what, 20 billion?
20 billion, yeah. And Rowe Price just launched their TKNZ active ETF. Though it is interesting, they're surprisingly underweighting Bitcoin right now.
Yeah, keeping it around 40% of their initial capital, right? So they can actively trade the momentum instead of just buying and holding.
Right, they're managing it like traditional equities. But honestly, the most important infrastructure story today is on the tech side. Take Cloudflare's new Buy 402 protocol.
I saw this in the notes. They are using the HTTP 402 code, which is that old payment required error, to manage AI access. How does that actually work in practice?
So imagine an autonomous AI agent needs to pull data from a paid server. Instead of hitting a paywall and stopping or, relying on a human's credit card, the 402 code triggers the AI to autonomously send a microtransaction in USDC stablecoins.
Oh, so it just bypasses the barrier instantly, 24/7.
Exactly, 24/7. Meanwhile, Visa is launching a stablecoin minting platform specifically for traditional banks so they can handle this exact kind of automated machine-to-machine traffic.
I have to push back a bit here, though. It feels like TradFi and big tech are just completely paving over the decentralized ethos for corporate gain.
I totally get that concern.
We're basically turning a peer-to-peer rebellion into just another corporate API.
Sure, but analytically speaking, it's not really about ideology. It's strictly about capital efficiency. Integrating stablecoins eliminates the latency of cross-border settlements, which is huge.
Right. Abstracting the blockchain mechanics is just vastly superior to relying on legacy wire transfers. But Citadel and Visa aren't going to build these massive tech bridges if the regulatory ground beneath them is shifting.
Which completely explains the sudden urgency in Washington today. You can't have autonomous AI economies without clear rules of the road.
Yeah, today's hearing for the Clarity Act is a massive piece of that. And also the NCUA Genius Act. The comment window for that actually closes today.
Right, and that's not just bureaucratic paperwork. It dictates exactly how credit unions are legally allowed to hold the physical reserves that back these stablecoins.
It's basically about legally mandating trust in the plumbing. And speaking of trust, there's a fascinating political firewall going up. Senator Warren is requesting Trump's crypto disclosures to push for boundaries.
Yeah, and the Senate just unanimously passed a resolution opposing any executive clemency for Sam Bankman-Fried. That unanimous vote is crucial.
It functions as this bipartisan statement, right? Separating the outright fraud of the previous cycle from the serious infrastructure legislation they're debating right now.
Exactly. They want to draw a hard line in the sand.
So for you listening, this is the main takeaway. We are witnessing a real-time structural shift from a casino of speculative asset trading to an embedded, automated financial engine.
The messy scaffolding is finally coming down, and the foundation is set.
Which leaves us with this question to chew on. If autonomous AI agents are now paying each other 24/7 in programmable stablecoins just to access the internet, does our entire definition of a consumer economy need to be rewritten?